Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Jill Simkins, CEO of XST Capital Group, Alex Kane, Chair and CEO of Sporttrade, Ken Bean, CEO of Pick the Odds, and Dean Sisun, CEO of ProphetX. We're here to discuss how emerging technologies, the regulatory environment, and evolving consumer behavior are shaping innovation in the digital gaming landscape. It is great to have all of you with us. Welcome to Trade Talks. Perfect timing as the NFL season is kicking off finally. Joel, great to have you back as always. Let's talk about the playbook. It's XST Capital Group's second annual sports betting roundtable. Give us an overview.
Yeah, we actually just released this yesterday. It's think of the Barron's Roundtable. This time we've got 31 CEOs all across the sports betting ecosystem, reg tech, compliance, operators, betting tools like Ken's company, and Dean, Jake, and Ken were all featured in our report, and we're really unpacking a lot of the trends that are driving the sector today. And it's a great opportunity for a lot of folks that we work with to really tell their stories and educate the investment community and other folks on their businesses. Yeah,
I'm curious to understand more about the infrastructure of the ecosystem and where you all sit within it. Give us a brief overview, Alex, of Sporttrade and where you sit within gaming.
Yeah, so Sporttrade's a regulated sort of sports prediction market. We are regulated by states currently, but we're in the works of working towards a federal license. But it works like a stock market where you can trade on the probability of anything to happen, not just the money line, but you can do spreads, totals, and it's really kind of Nasdaq meets DraftKings. That's the easy way to think about it.
Yeah, that is interesting. And Ken, tell us about Pick the Odds.
Yeah, so we're a tool that kind of allows users to collect information before they place their wager. We use advanced tech to really collect about 120 different sports books and then aggregate them for the users so that they can make the prediction that they think that is going to happen with the best outcome dollar value-wise.
And Dean, where does ProphetX fit into the ecosystem?
So similar to Alex, direct competitor to Sporttrade, we're a sports prediction market. We're in 40 plus states. We were previously regulated in New Jersey, but now we're operating under a different model.
Yeah, it'll be interesting to see how this comes together within a federal framework, if in fact that's what the goal is. But Joel, let's talk about some of the broader trends of gamification and fan engagement. What are some of the key themes you picked up on?
You know, it's really about customization. There's a lot of information. You can use tools like Ken's. You can obviously look across the different betting platforms. Essentially, consumers are looking for real-time information. They're looking for in-market or in-game micro-market betting opportunities. And you're seeing different sports books integrate different technologies coming from social media, real-time content, other information, analytics, et cetera.
Yeah. How do you expect competitive social betting to fundamentally change the space or enhance it?
Well, so I think, think about the advent of Robinhood coming out 2012, 2013, totally changed retail trading. You saw spreads go to zero, commission-free trading. I think we're on the precipice of seeing the same revolution happen within betting, where traditionally players are paying 5, 6, 7% on each bet. Think of that if you were paying that on a stock trade. And stock trading had this compression of margins. We think with these exchanges and brokerages now getting into the sports prediction market space, we could see that same revolution happen. And it's very exciting, particularly for tools like Ken, where players are already trying to get the best price.
Yeah, I mean, the more competition and the more you're able to scale these types of products, it's going to be better for the user at the end of the day anyway. Exactly. So to put it into some context, and let's call it TradFi language, when you're selecting different routes, if you will, you're the platform that you go to for the research and the data, and then a Sporttrade or a ProphetX would be your route, if you will.
Yeah, so like Alex's company, you can put up a line if you need something, if you want to pick a specific player to get a certain amount of points. And somebody might be offering that line there, but they also might be offering a different line at Dean's company. So when that happens, we kind of aggregate all that together and we put it in a nice platform so you don't have to log into 15 different apps to get that information. You go to one panel, every game that's available for a specific league is right there. Just scan across the board, find the best odds, and go place your wager. And most likely you're going to pay a lot less doing something like that overall in the longevity of your bets, which just makes your job a little easier.
How do you think that competitive social betting is going to change this space?
Well, I think we're going to start seeing a lot less juice overall across the board. Even like if you were to do like across, just the two people sitting at this table, you could probably get a 1 cent line compared to what it used to be 6 or 7 cents. So just something as simple as that, they really help benefit the field because somebody's going to have an opinion one way and somebody's going to have an opinion another way. A lot of things change throughout the game, injuries and all kinds of stuff. Weather plays a factor, but some people believe that their model is better than someone else's, and so for that reason, Everyone has a different.
Which is ultimately better for the consumer.
Right.
Absolutely.
The average, you got to remember, Jill, the sports betting industry is really only 5 or 6 years old here in the U.S. The consumer is still ramping in terms of their knowledge and comfort with the business, but when you add all these different tools, competition, a lot of different betting products, this is ultimately better for the consumer. They're getting better value for their money and probably stretches their gambling dollar a little bit further.
Yeah, we're kind of like where stock trading was in the 80s, is like the way I like to think about it. People were paying 10%, right, per trade, but now exchanges are taking more of the fold. If you think about it, like Joel just said, we've been around 5-6 years, that's it. Since the 60s, all people have known is sports books, right? So we're almost like inventing or creating a new philosophy. And then what you touched on with social betting, because exchanges are all peer-to-peer, then you can start to layer in a little more gamification. Then you can start to think about, all right, I can do everything that I can do on an exchange on a sports book and a whole lot more. So that's kind of the evolution that we're trying to get to, but I think education is the biggest battle to start.
Yeah. So Alex, you have to think about user experience at the jump.
Yeah, I mean, for us, it's like, what has companies like Schwab, Fidelity, I know Schwab being the sponsor of the segment, or Robinhood, what have they done to make stock trading so ubiquitous, so simple? And one of the things we really have delivered is live charts. So you could look at a live probability of, let's say, the Eagles to win the Super Bowl is maybe about 15% right now, but they go 3-0, that's going to go to 25%. We're now sort of packaging that in a user interface that is very familiar to someone that may be more familiar with stock trading, where IBM's trading up 100% over the last 2 quarters. The Eagles could be trading up over 150% over the first 4 games. So it's about allowing someone to see the probability change and then in one tap say, I'm out. I bought in at 15%, they're now 25%, I want to cash out my position, and that's what these exchanges are all about.
So Joel, every industry is being impacted with emerging technologies such as AI. How are you seeing that play out in the gaming space, particularly, you have live NFL bettings that's
we're on the front lines of that as investment bankers. I mean, we're constantly talking to companies looking to raise capital with an AI angle. We're seeing a lot of our clients integrate different AI technologies. We're switching gears away from sports betting. We're working with some companies that are on the content side, on the iGaming business, and they're all integrating AI right now to kind of expedite and accelerate their development of game content. So the slot machine content used to be perhaps built out by dozens of engineers. Now you're realizing, hey, I can make a slot machine game a lot quicker using a lot of AI tools and 2 or 3 engineers. So things are changing rapidly. I still think we're very much in the very early stages of that process, but it's definitely, if we were having this conversation a year ago, that might have been a very small part of our conversation. It's a much bigger part of the mosaic at this point.
Yeah, I also think, Ken, that maintaining the integrity of the sports book is important when you're thinking about, leveraging AI. It's rapidly changing as we speak.
Oh yeah, I mean, if you think about like just ChatGPT in general, it didn't really exist that much. It actually started way back with OpenAI, it was an esports game where they started it, and it's really impressive how you can take something with so many data points and be able to output an outcome. That is basically what they're doing. So as that starts to get even more and more accurate, you're going to start maybe even seeing down below 1 cent line, you might get to like a 0.5 cent line, which would really benefit the consumer as well.
What about integrity in terms of controlling gambling and people's attitudes towards that? Because you said education is a big part of this equation.
Yeah, that's obviously massively important, right? Like learning about, even if a consumer doesn't think they have an issue, how to identify that ahead of time. That's important. Making sure that people can have deposit limits and betting limits on themselves, right? It's a little more, call it like risque than trading, right? It's entertainment versus actually like true investing. So you have your consumers who are your more entertainment consumers, and how do you protect them against themselves at the end of the day, right? And it's a tough conversation to have, but it's something that we as operators have to be very cognizant of.
But it's interesting, Alex, because virtually every type of asset has been gamified in a way.
Yep.
And when you talk about consumer entertainment, well, you can make the argument during COVID especially that meme stocks were almost a consumer entertainment or form of entertainment because there was really nothing else to do but sit in the house and either mine Bitcoin or trade stocks.
100%, and I was a part of that. My sister was a part of that. We're all trading Chewy, thinking everyone's going to buy a pet because everyone's living at home. Listen, what we think is going to happen at Sporttrade is that we do think there's going to be a federal construct that emerges.
Right.
And in the void of that are all the things that were great about the state-regulated sports books, right? Consumer protection, market surveillance, responsible gaming. And so we kind of take it upon ourselves to be a leader and and think about how is this industry going to exist in 10 years? How can we get the biggest stakeholders bought in to this new federalization? And I think, as Dean said, it's just about being honest and trying to, this market's going to be a lot bigger. Brokers like Robinhood are already routing sports orders. So how do we make sure that consumers know what they're getting into? Because if we can make this sustainable, it can become a 10 times bigger industry than it is right now.
Yeah, and Joel, I mean, for any trading venue, understanding what those guardrails look like is key. Because regulation by enforcement, you don't want to stifle the innovation, but you also want to understand how to operate responsibly and ethically.
Yeah, and you're also seeing the incumbents start to enter the space. There was a pretty big announcement last week around FanDuel and the CME syncing up together. So this is really, really early days. I think you're going to see other players enter this space. And you know, I think as we look at prediction markets, daily fantasy sports, traditional OSB, these are all going to be different product types that consumers embrace. And ultimately, a lot of consumers are gambling across different platforms, right? So the consumer honestly is very agnostic to where they place their bet. They want the best deal. They want to use tools like Ken's to identify the best price, but they're going to place a bet wherever they can place a bet on a as legal basis as possible.
Yeah, well, it's interesting when you think about it, Ken, if you look 3 to 5 years out and the transformative impact that can be placed on sports analytics and all these platforms. Again, this industry is only 5-6 years old. Can you imagine trying to figure out what that half-life cycle is going to look like from now?
Yeah, minus out any like legalities behind it, but if we take that off the board, I really think like Alex and Dean's companies here at ProphetX, I really think that those companies have a really good shot at the future because as you start to consolidate these books, I think you're going to start seeing less of like a Caesars and an MGM and a FanDuel and a DraftKings, and I think you're going to see more of a marketplace where those guys actually come to these companies and list their lines what they believe to be the edge at, and in the end, all it will be is just one big platform or multiple platforms like that, like a Kalshi or something, where you can get your action in without going to like a specific company.
Yeah, which is interesting because that's almost, it feels, Dean, almost like the TradFi, DeFi integration that we're seeing in a sense.
I almost like to compare it to crypto more than anything. It's kind of the way I see the space evolving. You mentioned brokers. You know, Robinhood is the first one to dive in, but there's going to be a lot more that jump in, right? Wherever a consumer is parking their money, they're going to either speculate or trade with that money, right? So if it's already with a brokerage, why not trade sports on that brokerage, right? That's how we think of it. I look at, you know, crypto like Coinbase and Kraken and Gemini there. They own the end consumer, but then they also have brokerage connections, right? And that's, I kind of see more of a hybrid with our space rather than, you know, something like Nasdaq or something like the New York Stock Exchange where you're not a B2C company, you're predominantly a B2B company, right? So yeah, that's kind of how I see it.
But it's an interesting correlation that you make to crypto because, again, to your point, they're going to go where the addressable market is. And the incumbents are not just going to sacrifice that business elsewhere. So maybe if they don't grow it out organically, they will, you know, merge with smaller companies. You're going to need, you know, it can't be an us versus them. It's going to have to be an integration of both. I mean, you need to scale.
It's such an opportunity too for these incumbents, right? They already have so many consumers. They already have a massive wallet share, right? Like they can go get an FCM license. They can go compete with Robinhood instead, right? Or they can go down the operator angle and compete with the exchanges. You know, I think they are kind of uniquely positioned to take advantage of this, but yeah, it's kind of how I see it evolving.
I think a regulatory framework, Alex, is going to be key to that.
Yeah, I think, you know, what's emerging right now is potentially the Commodities and Futures Trading Commission could be the regulator of this. And I think there's some opportunities to improve that regulatory structure, but I think the starting point is one of intermediation, right? Where you have the exchanges, you have the clearinghouses, you have the brokers, you have the market makers. That's a market structure that works so well for Bitcoin futures, for traditional indice futures, for stocks. And now we get to bring sports trading under a framework we know works so well. And to Dean's point, you're going to have companies that more emerge as exchanges. You're going to have companies that more emerge as brokers. You're going to have some companies that are going to try to do both. We think that could be very challenging is if you're going to be a broker, an exchange that's trying to compete for customers, it's going to be hard to get brokers to plug into you. That's one of the reasons why Nasdaq or the New York Stock Exchange doesn't have a consumer interface is because they're big businesses from the Schwabs and the Fidelities and the Robinhoods of the world. So it's a market structure that's so exciting because to Ken's point, we're going to see the spreads compressed to almost zero and the volume is going to 100x.
Yeah, and if the consumers are demanding products, Joel, it will, whether it's in a form of a wrapper, who knows, maybe get an ETF or something out of this.
We've talked about this before, but I mean, you just look at the demographics that are underlying kind of this new age of sports betting and online gaming, right? It's Gen Z, it's Gen Y, millennial. there's just a huge amount of folks in those three buckets, right? So land-based traditional gaming, Las Vegas, right? That's going after the destination traveler, that's going after a baby boomer. I mean, that's going to still be with us for quite a while, but this is really the future. It speaks to a much larger audience, and pulling out your phone and placing a bet real time, getting all this information, that's really what the consumer wants. And that's where it's really headed.
Well, I'm glad you brought that point up, because the last panel we were on a few months ago, one of the guests had mentioned that they're trying to make it replicate an experience that they grew up with, like a Roblox, for example, where you have that social component in there, and it looks familiar and operates along those lines.
Yeah, no, it's interesting. We were talking with a company today out of Europe that's going to be launching their online casino in New Jersey shortly, and I was like, well, to describe your online casino, what is it like? He said, Joel, it's a TikTok casino. It's literally swiping. It's a much different user interface and experience, and I think it'll be a bit of a learning curve around that, but for that consumer that's used to swiping for really everything they do, that's going to make a lot more sense than clicking on this game and pulling up that game and waiting for it to load, versus literally swiping and playing a slot machine instantaneously.
How do you see it impacting the media space?
It's interesting. I mean, big media, I think, is embracing, sports betting, online gaming.
It's like a DraftKings channel, or it's on all the time in my house anyway.
Well, I mean, but also it's been a mixed bag, right? You had the Penn integration with ESPN, that hasn't gone that well. So I think it's going to be the earlier stage, more rapidly moving media companies that can embrace and understand this ecosystem versus traditional media.
Yeah, I mean, you're seeing that across the sports space in general. Yeah. What are your expectations, Alex, in terms of getting a framework, or what's the next catalyst here in this space, is another way to frame it?
Well, so the NFL had some very interesting statements yesterday regarding prediction markets, and I think that community has work to do to create that critical consortium, right? That right conglomerate, the right strategic mix, so that, if you look at the leagues in 1992, they were critical in passing legislation that banned sports betting outside of Nevada. And fast forward to 2018, and all of a sudden they were for it. Why were they for it? Well, because they were able to put the commercial partnerships in place, but they were also able to put together a platform that, solved the match integrity, league integrity, participant integrity, responsible gaming. And now you see ads run by the American Gaming Association, sponsored by the NFL, talking about bet with a plan, right? That was their whole campaign last year. So I think it's about creating alignment, to your point, and working together, as opposed to potentially some of the stuff we're seeing now, where different companies are trying to go tit for tat and saying, I'm going to be the prediction market of the future, no, you're a copycat. I just think that stuff isn't going to lead to a sustainable market.
Yeah, I think it goes back to what we were saying before with not stifling that innovation.
Yeah, we definitely don't want to. Like, the more tools we often included in our product, we often say, if you want to talk about another product, it's totally allowed. We should encourage more competition in the space, because all it does is benefit everyone as a whole. We don't want to go after a specific sports book or a market if they have misplaced lines or something like that. That's not exactly what we want to do. You want to win when you bet, but you also don't want to harm anyone else out of doing it. There's the right way to do it, and then there's the wrong way.
All right, appreciate all of your insights. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.